Hi everybody, it is the 14th of March. Just a very quick video. I just bought some puts on the FTSE, so just wanted to update you guys about that. Just have a look at the quick look at the rationale behind it as well. So we're grinding up. It's been pretty quiet all year really, but certainly for the last few weeks. Now the FTSE is sort of narrowing into this wedge type formation. And the other thing I'm watching pretty closely at the moment is oil. I'll have a quick look at the oil chart now. I did a video on this a few weeks ago, and the oil was forming, this is Brent by the way, it was forming this sort of formation in terms of sort of this ascending triangle or whatever. There's a lot of resistance around here, but it looked to me as though it very much end up breaking above there. But it seems that the opposite is happening. It's broken down now. And this could be significant really because of the parallels with what happened in September and October of 2014, between what happened the oil price, what happened to the FTSE. This was September 2014, big sell-off down here. And if we go back, this is the FTSE at the moment in this wedge formation. If we just head back to 2014, this is it here. It's not as obvious. It made slightly higher highs, kept making these higher lows, and it narrowed, and then this is where it broke as the oil price crashed. So just interesting to note that I always pay attention to the price of oil, but I'm following a lot closer at the moment. Coupled with that, just the general pattern that's forming, the fact that there really hasn't been any sell-offs, any profit taking to speak of. For a long time now, and we've got the Netherlands election coming up in the next couple of days. We've got backdrop of tightening in America. Obviously, got the French elections coming up. We got Article 50. I just think it's a good time. Just take a different sort of view. Take the other side of the market a little bit. If this does break down. With any sort of geopolitical events or the oil or whatever it may be, or just the fact that we're due a correction, long overdue a correction really, which would be, in my view, a pretty healthy thing to happen to the market. And then it could be an opportunity to make a decent return. So I don't normally trade like this with the actual index. I normally sell them, but I'm going to buy them. I sold, if you've been following, I sold some June 7600 calls a few days ago. They're nicely on side, so I've used some of that capital to buy some puts. So I bought the June 6600 strike FTSE puts, and I paid 50p for them, so that's £2,000. But my calls that I sold are more than covered. I've covered the debit on that. And if there is a decent breakdown, then that could be it could be the sort of trade you could make 3 or 4 to 1 on. So we'll see how that goes. There's obviously a lot coming up in the next few days. The other thing actually worth pointing out is cable's back below 121.50. It's under pressure, but for the first time really since really for a long time, since the Brexit vote really, last June, it seems in the shorter term at least that the correlation between weaker pound and stronger FTSE seems to have come to a bit of a halt at the moment. I suppose it's always going to happen at some point. If your currency keeps weakening, it's going to be a sign there's a few sort of gremlins or whatever, but that's been interesting to see. Normally, if you got back down to the sort of 121s level, you'd have thought the FTSE would have really rallied again, but it's not. It's under a bit of pressure, so that's worth noting as well. So things to keep an eye on: sterling, oil. Federal Reserve's probably nailed on for tomorrow night for a rate hike, I would think, and obviously Dutch elections and how Article 50 play out are going to be key as well. So yeah, interesting few days ahead. Yeah, well, let's see how it pans out.